Ponzi schemes and financial frauds have been around for time immemorial. They are everywhere. In today's video, I want to talk about a particularly big one in the People's Republic of China, Ezubao. It took advantage of the growing person-to-person financial lending trend, P2P, to generate illegal gains for the organizers. It exploded onto the scene in 2014 and quickly gathered $7.6 billion in funds. They told their victims that the money would be going to reputable borrowers. Instead, it went directly into their pockets. In 2015, less than 2 years after Ezubao's big debut, the scheme collapsed and 900,000 quote-unquote investors lost the ability to access their money. People got arrested, social unrest happened. The founders of Ezubao had taken lenders' money and gone on a spending spree so wild, it basically got the industry banned by the government. The Chinese economy, its small businesses in particular, suffers from a shortage of capital. The banking system controls some 75% of the financial transactions in the country. On the whole, these commercial banks stick to higher value, low-risk clients like state-owned companies. The result is that small to medium businesses, SMEs, and startups are starved for a lack of capital. Despite employing the vast majority of the population and generating the majority of economic output, these companies receive less than a third of all bank credits. P2P lending platforms have arisen to fill this market need. P2P lending platforms help facilitate direct loans between lenders and borrowers. The borrowers pick which projects and companies that they want to fund. The platform facilitates a transaction and takes a cut as a result. P2P lending platforms are not new. They exist in the US and the UK. Lending Club, for example, in the United States. Success factors in this type of business involve maintaining the platform's consumer trust, assuring absolute transparency of the whole transaction, and keeping as a neutral, mutually trusted party that goes between lender and borrower. Ezubao, of course, did not do any of that. In 2014, a man named Ding Ning, an entrepreneur from the Anhui province, registered a Chinese company called Jin Yi Rong Network Technology with some 15 million USD in starting capital. It quickly began operating a P2P lending platform called Ezubao. As was standard practice for most companies with big ambitions, Jin Yi Rong was in turn owned by a foreign shell corporation domiciled in the British Virgin Islands, Yucheng Group. This is generally done by Chinese companies eventually looking to go public. Yucheng Group also founded a hodgepodge of affiliates. They had many different names, Zima Finance, Yushen Finance, and Yinwu Fortune among others, but they all seemed to serve one purpose, to resell Ezubao products on an agency basis. Who was Ding Ning? Just 33 years old at the time of Ezubao's founding, he grew up in Bengbu City in Anhui. Over 1 million people live in Bengbu, but most have never heard of it. He has a younger brother and a couple half-siblings. His parents founded a small but successful factory making lead seals and metal fittings for railway construction and shipping containers. It grew to employ over 100 people. Business was on the decline. 2014 profit was just $43,000, but it made enough. Ding Ning was described by neighbors as a quote-unquote dull guy with an average intellectual and emotional intelligence. He had no interest in growing an industrial business, especially one that made lead seals. Instead, he sought ways to become rich. He looked for his fortune in the world of finance, declaring, "Only doing finance is the highest state of being in an industrial entity." He joined with his Australian-educated cousin and began exploring the world of internet finance. Ezubao mostly targeted people in the Shanghai Free Trade Zone, where regulations were weaker. The minimum amount you needed to invest in any of Ezubao's 6 financial products was 1 RMB. The annual return rates were advertised to range from 9% to 15%. Supposedly, the holding periods were just 3 months, 6 months, and 12 months. And investors could withdraw the funds just 2 or 10 days after sending notice. That's crazy. If it wasn't for the fact that they weren't real, these loans would be amazing investments. And amazingly enough, Ezubao advertised in plain sight on government-owned TV networks like China Central Television and on high-speed rails. People watching those ads thought that Ezubao had the stamp of government approval, which it didn't. Quickly, the company began to attract quote-unquote investors, eventually piling up $7.6 billion from 909,000 individual investors. At its peak, Ezubao represented 5% of the entire P2P lending industry, good for fourth place in market share. And they did all of this in just 1.5 years. These investors were putting money into Ezubao P2P lending platform because they thought the money would then be lent to reputable borrowers. The reality was that they were getting paid out from subsequent lenders. Little lending actually happened at Ezubao. Just one of the 207 listed companies on the platform received any money at all. The rest were just fictions. Ezubao's holding company, Yucheng Group, supposedly occupied a lavish 10,000 square meter office on Beijing's Third Ring Road. The annual rent on this building alone was estimated to cost $52 million a year. Even were it not for this astounding rent, Yucheng would already be bleeding out a fortune in advertising, even if it had a legitimate business. Their CCTV ads would cost $3.6 million a month, all by themselves. Furthermore, the company paid immense salaries to a lot of unqualified people, over $100 million a year. Take, for example, Ding Ning, a younger brother of Yucheng Group founder Ding Ning, who joined the Yucheng Group with a monthly salary of $146,000. Yes, monthly. Before then, he made a monthly salary of just $2,600. Virtually all of the company's high-level employees had little to no experience in investment or financial management. Most of them seemed to have been beautiful women hired from high-end dating circles, dating services connecting rich guys with beautiful women. And all of this is just accounting for legitimate company expenses. Ding Ning used the money to fund an extravagant private life. He had quote-unquote close relationships with all of the high-level female executives, who, as you recall, tended to be beautiful women, and he freely gave them gifts. One of those women, Zhang Min, is purported to have received from him a $1.5 million pink diamond and a $20 million Singaporean villa. He also gifted her $80 million USD in cash bonuses. The total value of these gifts is estimated to have been around $150 to $230 million. All of it was paid for with funds garnished from the investments of its unwitting victims. In December 2015, less than 2 years after the company's founding, reports came filing in that Ezubao was being investigated for financial crimes. A few days later, the police arrested Ding Ning and other major executives. The company's website was shut down, freezing everyone out of withdrawals and thus their money. Ezubao had defrauded investors all across China. As investors closed in, company officials packed over 1,200 volumes of company records into over 80 nylon bags and buried them 6 meters underground outside of Hefei City in Anhui. The Chinese police had to bring in construction equipment and excavators to recover it. Many people lost money, and the public rose up in fury. 100,000 people was said to have marched to Beijing to petition the Anti-Corruption Bureau, the Central Commission for Discipline Inspection, for justice and their money back. Such a thing, and in Beijing of all places, is of course extremely verboten, and it got people's attention. In August of the following year, police prosecuted 9 suspects for financial and fundraising fraud, including the aforementioned Ding Ning and Zhang Min. Ding was sentenced to lifetime imprisonment and a $10 million USD fine for his crimes, while his accomplices received 5 to 15-year imprisonment sentences. It would take nearly 5 years for any money to be returned to the original investors. When it finally did come back, they had lost some 65 to 80% of what they put in. As Ezubao grew and exploded onto the scene, more than a few people thought that the goods that they offered were too good to be true. More than a few invested because of that. They probably knew that it was likely all a financial fraud, but wanted to get in while the getting was good. They got caught in the bear trap before they can take out their hands. Regardless, the damage that these online scams do to society are incalculable. These were people's life savings. And of course, the scandal disturbed the peace in a way that the government can never accept. Xi Jinping himself would call out the Ezubao scandal by name in an April 2016 speech to the CCDI. The Ezubao case that occurred some time ago illegally raised funds under the banner of quote-unquote internet finance, causing serious property losses to the people concerned, and the social impact was very bad. Nowadays, there are more and more cases of online fraud with a new modus operandi and using more advanced technology. Beyond the collapse of the Ezubao financial scheme, regulators started to see more red flags. 51 Credit Card, for example, hired debt collectors who were cited for employing intimidating and harassing tactics. And in the end, the government finally seen enough. In November 2019, regulations were passed that required all P2P lenders to convert into being regular small loan providers within 2 years. But by now, the Chinese P2P industry had collapsed into a shell of its former self. Lufax, once the biggest in the industry and backed by insurance giant Ping An, exited the market. Less than 500 firms now exist in the market, which once measured over 6,000. So, I really enjoyed this video, researching and looking at all the craziness that came around about it. It's a story that how the company came in so fast and blew up so fast too was really fun, and I enjoyed reading about it. I hope you did as well. All right, everyone, have a good night.